In this video, I want to talk to those who are thinking about real estate investing. Talk a little bit about what to know about buying investment property. One of the great things about buying investment property is it can provide a great source of passive income, but also does have some challenges, and so you need to do so strategically. You need to make sure that you have an agent that has some experience with that can help you with some of the challenges that may come up with managing an investment property. But I want to talk a little bit about, first, there are a few different types of investment property options. One is house flipping. We've all seen like Flippers and all these shows on HGTV. It can be a way to make some quick money, but you got to know what you're purchasing. You got to know before you purchase a home what are the likely repairs, and then figure that you're going to find some things. You know, once you open Pandora's box, you end up with some surprises, and so you need to anticipate there's going to be more cost to flipping that house than you originally think. But you got to find the deals out there. And then once you fix it up, you got to have some good contractors, unless you're a do-it-yourselfer, but have some good contractors that you can trust and rely on to flip that house. And then once it's done, you put it back on the market. And then when you make a profit, you take your profit from that, you fund that into another flip, and so on and so on, and you grow your flip business that way. But it's not as easy as it sounds. Don't believe the HGTV shows that are out there. You've got to have those good connections in the construction industry, and you got to make sure that you're buying the right houses in order to flip them and sell them. The second type of investment is residential rentals. And there's actually two types of residential rentals. One is long-term rentals, so you're looking for a tenant that's going to live there a year, 2, 3, 4, 5. You're not going to go through as many tenants, hopefully. And this could be a condo, apartment, or a single-family home that they're renting. If you find a good tenant, that can provide a good stream for you for many years. The trick is finding that good tenant. Who's going to take care of your house, because it is your house, not their house, and who's going to pay their rent on time, regardless of what's happening in their life. Where a lot of people fall down on the residential rentals is not doing adequate research on their prospective tenants. And making good choices on who their tenants are going to be, and then not also keeping up with maintenance. I recommend that you work with a property management company, otherwise you're going to be spending all your time responding to tenant concerns with the property. Let a property management company take care of that. Follow their guidance in terms of reserve funds so that you can make necessary capital improvements and repairs as they come up. That's all important. There's also short-term vacation rentals. Now there you're looking for people really almost running as an Airbnb. You're looking for people that are going to come for a few days to a week or so on vacation. So if you live in an area where that's a popular option, we happen to with all the theme parks in our area, or if you go to the coast, certainly there's options there. That can be a very lucrative option as well. Plus you have the added benefit of a house you can go to when you want a vacation, as long as you're okay taking a week or so away from when you might be able to profit. The third option is commercial rentals. Works pretty similar to a residential rental, and you're looking for business owners. So you're buying office spaces, things like that to rent out to businesses. Benefits of owning an investment property, again, the potential to earn passive income. It's one of the major benefits. Real estate is still the best long-term investment that there is. There are also, though, some potential tax benefits as a real estate investor. You could have deductions and tax breaks. Make sure you treat your investment as a business so you can get the most out of it as far as tax benefits. Make sure you discuss any tax benefits with your financial planner and your tax advisor so that you're complying with all laws and doing things the way you need to. But that can be a real benefit. Also, when you own property, you always have the possibility that it will increase in value. And in general, if you hold a property long enough, it will increase in value. And so when you do turn around and sell, if you've held it long enough, you're going to have the profits for when you sell. As far as financing, you can finance it by yourself. You can use a mortgage. You can use equity from the home that you own. There's a lot of different ways to finance investment properties. You can even get a DSCR loan, which basically is a loan that's based on the rental value of the home, where they don't even need to look at your financials. So a lot of different ways. You need to have a lender who has some expertise in investment loans. Finally, it's a flexible investment because you can choose how involved you want to be. Again, I recommend you get a property management company involved to take some of the day-to-day stuff off your plate. But if you want to do it all yourself, you have the ability to do that. So there's a lot of flexibility in how you manage that investment. Things to keep in mind that can be cautions. Obviously, the initial investment can be high. You're buying a house or an apartment or a condo, essentially. So, your upfront costs are going to be rather high, even if you're flipping. In addition to the investment being high, there are also ongoing costs. So, with a long-term investment property, you have to look at maintenance, end of tenancy cleaning fees. You also have to make sure that you're putting money aside for kind of capital improvements, things like new ACs, roofs, etc., so that you're not having that bill come due all at once. So you've got that money saved up. You'll have so you have to plan for all of that. The third challenge or caution is that finding the right tenant isn't always easy. We already kind of talked about that. It's real important to do your research, do background and credit checks. The reality is, though, that even the best tenants, sometimes life throws them some curveballs and things happen, and there's just really no way to insure against that. But it's real important that up front you do your homework and do that background and credit check. Make sure you have a solid rental agreement. I would invest in running one by an attorney to make sure that you've got a good rental agreement, or work with a realtor who has access to the Florida rental agreement. The fourth caution is that property prices can drop. Again, one of the hedges against that is to make sure you hold the home long enough. Generally speaking, real estate prices increase over the long term. Short term, you might see some drops, but long term, you generally don't. And then the fifth caution is that it's not a liquid asset. So you can't get money out of the house quickly, generally speaking. The best way to get money out of the house is to sell it, and that's generally not a quick process. And so if you are thinking of investing, let's reach out, let's have a conversation, let's talk about what your goals are, let's figure out what the best investment strategy is for you. Remember, if you're looking to buy or sell in Central Florida, I'd love to be your resource. You can't miss with Chris. Have a great day, everybody.